Welcome to Day to Day News, where you get news updates about the latest trends in the South African economy. Let's get to the news. Housing bonds are going up in South Africa, and here's why. The South African Reserve Bank has announced a 50 basis point hike, taking the current prime lending rate from 10.75% to 11.25%. This recent hike marks the ninth rate hike since the current hike cycle started in November 2021, totaling 425 basis points over the period. Rates are now at their highest point in 13 years, when the fallout from the global financial crisis weighed on the local currency. The rate hike was higher than market expectations, with most economists and analysts anticipating a 25 basis points hike. Economic and financial conditions are expected to remain more volatile for the foreseeable future. In this uncertain environment, monetary policy decisions will continue to be data-dependent and sensitive to the balance of risks to the outlook. The property market is mindful that the South African Reserve Bank faced a difficult decision. The Eskom energy crisis, weak business confidence, deterioration of the consumer price index, inflation to 7% in February, and pressure on the currency left little wiggle room. However, he added that the 50 basis points hike is a bit steep, and the higher interest rate will affect buyers and homeowners. It will result in higher repayments of home loans and other credit and put further pressure on the cost of living and disposable income. Nonetheless, the hike was largely expected and already factored in by the market. While not ideal, the rate is still below the historical average of the last 20 to 30 years, and we are still seeing a strong, stable property market, said Seif. The impact of the higher interest rate is somewhat mitigated by the continued favorable bank lending climate, which is still the best in over a decade. The increased transfer duty exemption threshold to 1.1 million is also a positive for buyers, he added. Business is expected to go on as usual for now, noting that the monthly transfers are still slightly ahead of the pre-pandemic levels. According to Herschel Jawitz, CEO Jawitz Properties, the rate hike will undoubtedly put pressure on homeowners, but he said the risks of allowing inflation to persist at high levels is far greater. The rationale behind the decision by the Monetary Policy Committee far outweighs the risks posed by sustained high inflation. With inflation at 7%, there are very few sectors of the local residential market that are delivering inflation-beating growth in property prices on average. Property prices are expected to increase this year by 2.75% to 3.5%, which means that in real terms, after inflation, property prices are declining by a similar amount. As long as inflation remains high amid low economic growth, real property price growth will remain marginal, he said. Below are the tips for homebuyers in light of trying economic times. Potential and current homeowners should focus on what they can control, says Anthony Goosen, the principal and founder of Meridian Realty. Goosen suggested the following 6 considerations for prospective and current homeowners. Use a bond originator to secure the best rate. Many financial institutions continue to compete and offer relatively favorable terms, some offering 100% bonds. Choose from fixed interest rates versus variable bonds. You can only fix the interest rate on a bond for a maximum of 5 years, but this might make budgeting in high interest periods easier, even though your interest might be higher. Consider renting a garden cottage out or running an Airbnb as additional income to put toward rising bond repayments. Pay more than your monthly repayment into your bond. If you have a big property, consider subdividing. This can mean you cut down on maintenance costs and make money on the land that you are not using. Put this money into your bond, if you can, to shorten the payback period and essentially the amount of interest you would be paying on the property. Consider renting rather than buying. When renting a property, you know your rent is fixed for a year with an annual increase usually of 10%. Thank you for listening. This has been Day to Day News. Please like and subscribe and share. See you next time. For more news, please head on to Day to Day News channel right here on YouTube.